Bid price. The price at which a broker or market is willing to buy an asset. It's always lower than the ask price. You sell at the bid. Ask price. The price at which the broker or market is willing to sell an asset. It's the price you pay when you buy. Spread. The difference between the bid and ask prices. It's essentially the broker's hidden cost or fee. Pip. A percentage in point. The smallest unit of price movement in Forex, usually 0.0001 for major pairs. Lot. A standardized trading size. One standard lot equals 100,000 units of the base currency in Forex. Leverage. Borrowed capital that allows traders to control larger positions with less money. It increases both profit and risk. Margin. The amount of money required to open or maintain a position. It's like a security deposit. Equity. The real-time value of your trading account, including floating profit or loss from open positions. Balance. The amount of money in your account excluding open trades. It only reflects closed positions. Free margin. Funds available for opening new positions. It's your equity minus used margin. Market order. An order that executes immediately at the best available price in the market. Limit order. An order to buy or sell at a specified price or better. It waits until the market reaches your level. Stop order. An order triggered once price hits a predefined level, commonly used for entries and exits. Stop loss, SL. An automatic exit set to limit your loss if the market goes against your trade. Take profit, TP. An automatic exit set to lock in profits once the market reaches your target price. Support. A price level where buying interest is strong enough to prevent further decline. Resistance. A price level where selling pressure tends to stop a price from rising further. Trend. The general direction of the market. Upward, bullish, downward, bearish, or sideways. Breakout. When price moves above resistance or below support, potentially starting a new trend. Reversal. A change in the direction of a prevailing trend, signaling a possible new market phase. Candlestick. A charting style that shows price movement using a candle with open, close, high, and low prices. Relative Strength Index. An indicator that measures momentum and signals overbought or oversold conditions. 0 to 100. MAC-D. The Moving Average Convergence Divergence. An indicator used to identify trend changes and momentum. Moving Average. A smoothed line showing the average price over a selected period, used to track trends. Fibonacci Retracement. A tool that predicts potential reversal levels using Fibonacci ratios like 38.2%, 50%, and 61.8%. Risk-to-reward ratio. A measure comparing potential profit to potential loss. Higher ratios mean better trades. Drawdown. The decline from the peak balance to a trough, showing how much you're down before recovery. Overtrading. Taking too many trades, often emotionally, leading to fatigue, poor decisions, and losses. Fear of missing out. The fear of missing a good trade. It often leads to impulsive, risky decisions. Greed. Holding on to positions too long or risking too much in hopes of bigger profits. Often a costly mistake. Long position. Buying an asset expecting its price to rise. Buy low, sell high. Inaction. Short position. Selling an asset you don't own, hoping to buy it back cheaper. Profiting from price drops. Unrealized P&L. Floating profit or loss from open trades. It changes in real time with the market. Realized P&L. Profit or loss that becomes final after closing a trade. Swap/rollover. Interest paid or earned for holding a position overnight, based on the currency pair and direction. Hedging. Opening a second position to offset risk in your current trade. A common risk management method. Scalping. A trading style involving quick small profits by opening and closing trades within minutes. Day trading. All trades are opened and closed within the same day. No overnight exposure. Swing trading. Hold in trades for several days or weeks to capture medium-term trends. Position trading. A long-term approach where trades may last weeks or even months. MetaTrader. Popular trading platforms offering charting, indicators, and automation for Forex and CFDs. CTrader. A professional-grade trading platform known for transparency, clean interface, and advanced tools. Demo account. A practice account with virtual money. Perfect for learning without financial risk. Live account. A real money trading account used to place actual trades in the market. CFD. a financial contract allowing you to speculate on asset price changes without owning the asset. Liquidity, how easily an asset can be bought or sold without major price movement. Slippage, the difference between the expected price and the actual executed price, usually in fast markets. Volatility, the degree of price fluctuation in a market. More volatility means more risk and more opportunity. Fundamental analysis, analyzing economic data, news, and reports to predict market movements. News trading, opening trades based on market-moving news events like interest rate decisions or job reports. Liquidity provider, an institution or individual that supplies liquidity to a market by offering buy and sell quotes. They help reduce slippage. Order book, a list of buy and sell orders for an asset organized by price. It shows market depth and interest. Slippage tolerance, the maximum price difference you're willing to accept when executing a trade. Common in volatile markets. Risk management, a set of strategies to control risk exposure, including stop losses, position sizing, and risk-reward ratios. Trailing stop, a dynamic stop loss that moves with price in your favor. It locks in profit as the market moves. Position size, the volume or amount you're trading based on account size and risk tolerance. Lot size specifies how many units of an asset you're trading. It affects your pip value and margin requirements. Margin call, a broker demand to deposit more funds because your account equity has fallen too low. Stop out level, the level at which the broker automatically closes your positions to prevent a negative balance. Volatility index, a measure of expected market volatility, often called the fear index. Central bank, an institution like the Federal Reserve or ECB that controls monetary policy and influences currencies. Inflation, the rate at which the general level of prices rises. High inflation reduces purchasing power. Deflation, a decrease in the general price level of goods and services, can indicate economic slowdown. Gross domestic product, the total value of goods and services produced in a country, a key economic health indicator. Recession, 2 consecutive quarters of negative GDP growth, often leads to lower interest rates and risk-off markets. Commissions, fixed fees charged per trade, separate from spreads. Many brokers offer commission-free accounts. Rebate program, a reward system that gives traders a cashback or discount based on their trading volume. Know your customer, verification process used by brokers to identify clients and comply with anti-money laundering rules. Execution speed, the time it takes for a trade to be executed after placing an order. Critical for scalpers. Requote, when your broker offers a new price instead of executing your trade at the requested price. Common in slow platforms. Regulated broker, a broker that is licensed and supervised by a financial authority like ASIC, FCA, or CYSEC. Unregulated broker, a broker operating without regulatory oversight, often riskier but may offer more flexibility. Scam broker, a fraudulent broker that manipulates prices, blocks withdrawals, or vanishes with client funds. High-frequency trading, automated trading strategies that execute many orders in milliseconds using algorithms. Algorithmic trading, trading done using pre-programmed rules and computer code, removes emotional decisions. Social trading, copying trades from experienced traders. Platforms like eToro made this mainstream. Copy trading, a feature that lets you mirror another trader's actions in real time. Economic calendar, a schedule of upcoming economic events and data releases, crucial for news trading. Interest rate decision, central bank announcements that set benchmark interest rates. Major market movers, non-farm payrolls, a key U.S. economic indicator showing job growth, heavily impacts Forex and indices. Subscribe for more videos, and remember, YouTube's got something it knows you'll want to see next. Trust the algorithm. It's smarter than you think.